In this video, I want to go over the most misunderstood thing in trading, and that's moving averages. You probably see them on every chart, but most people are using it completely wrong. So let's not slow this down. Let's get straight to it. So the first thing you need to understand is a moving average is not a signal. It's not telling you where to buy and sell. And this is where most people mess up. So they see price touch a moving average and then they instantly jump in. And yeah, don't get me wrong, sometimes it works, but most of the time it doesn't, because you're reacting to a line instead of understanding what that line represents. Pretty much a moving average is just the average price over time, and it's showing you where price has been, not where it's guaranteed to go. So before we get into anything, let's talk about the types of moving averages, because this matters more than people think. So you got the SMA and you got the EMA, and the EMA reacts faster because it puts more weight on recent price. So let's just say in faster markets, the EMA is going to give you a better read on momentum. And that's why most people who actually understand what they're doing lean towards EMA for short-term moves. So for me personally, I like using EMA when I'm swing trading in the Discord. So as an example, for short-term momentum, I'm more focused on the 10 and the 20 EMA, or at least between those two. And that pretty much tells me one thing, and that's if price is in control or not. So if price is holding these levels, to me, that tells me that momentum is there. And let's just say it starts losing that level. That's usually the first sign things are going to slow down. So what I just described is short-term price action, but let's get into midterm price action. So for midterm direction, I usually go for the 50 moving average. At least for me, this is where I see pullbacks happen, and this is usually where better entries usually form. So like for an example, if a stock is super duper strong, you'll see it respect that 50 over and over again. So that's short-term direction, midterm direction. And then for the bigger picture, I usually go for the 200, and this is what defines the trend. So above it, institutions are generally accumulating, but below it, you're fighting a bigger downtrend. And this is where a lot of people lose money, because they try to go long in a downtrend and then short in an uptrend. So what actually matters to me is that I'm not just looking at moving averages on their own. I'm looking at how price behaves around them. So let's just say we're in an uptrend and price pulls back into that 20 or 50 EMA, holds, and then it starts to push higher. That's where I would personally start looking to be involved. That's where I'll start maybe scaling to an entry, all that fun stuff, because now I have the trend, I have structure, and I have momentum on my side. And it's the same thing for downtrend. Below the 200 and then rejecting the 50 and then failing to reclaim that 20 EMA, that's where continuation happens. Another thing most people completely ignore is slope. A flat moving average usually means consolidation, and a strong slope means momentum is actually there. Also, I want you guys to start paying attention to how price moves into these levels. If it's a slow pullback, for an example, that usually means continuation. Or if it's a sharp move, that's where you need to be a little more cautious, because that can lead to a deeper reversal. So of course, I'm not going to go through this whole video and not talk about entries, because that's the most important part, to be honest. Most people either jump in as soon as price touches a moving average or chase after it's already gone. So for me, what I do is I let price come into the level, watch how it reacts, and then that's where I make my decision. So I ask myself, are buyers stepping in? Are we holding structure? And things like, is momentum still there? And if yes, I take the trade, or if not, I just wait or I move on to the next setup. And for me, that gives me better timing, better entries, and actual control over my swing trades. And that's how you avoid from getting trapped. So instead of being stuck in the wrong position, you're either staying out or catching a move the other way. Now, when you put everything together, it becomes pretty simple. You first identify the trend, use moving averages for direction. I want you guys to start focusing on the 10, the 20, 50, and the 200, and then watch how price reacts around those levels. Because once you start using moving averages in your trading, everything slows down. So like I said before, your patience get better, your entries get better, and you're now reading the market the way it's supposed to be. As you guys know, I take all my trades inside the Discord. So if you want my entries, exits, or you want to join my community, everything's in the description. Let's get this video to 100 likes, and I'll see you guys in the next video.